Today, we are diving into stocks that analysts predict could jump up to 840% in the coming months. They hold the potential to transform a small investment into life-changing wealth. Two strong by penny stocks that have everything it takes to not only survive in the competitive markets they operate in, but thrive and potentially make their early investors rich. So if you're serious about making money in the stock market, make sure to watch this video till the very end, and remember to subscribe and turn on notifications so you never miss an update on the hottest stocks in the market. The first company on our list is Protara Therapeutics, trading under ticker symbol TARA. Protara is a clinical-stage biotechnology company focused on developing transformative therapies for patients with cancer and rare, life-threatening diseases. This is the type of company that fits right into the mold of high-risk, high-reward biotech. But what makes it stand out is that it is not a one-dimensional story. Financially, Protara's second quarter of 2025 highlighted the typical challenges of a clinical-stage biotech, but with a few bright spots that show the company is well-positioned. The company reported a net loss of $15 million, translating to a loss of 35 cents per share. This was wider than the $9.5 million or 45 cents per share loss recorded in the same period in 2024, but the increased spending was directed toward research and development, which rose from $6.4 million to $10.8 million year over year. For biotech investors, higher R&D expenses are not necessarily bad news. They are a sign that the company is pushing its trials forward and moving closer to potentially value-creating catalysts. General and administrative costs also rose, reaching $5.8 million compared to $4.3 million in the prior year, reflecting the growing infrastructure needed to support clinical development. But the most important part of the financial story is the balance sheet. As of June 30th, 2025, Protara held approximately $146 million in cash equivalents, and investments. This provides the company with enough runway to fund operations into mid-2027, a significant cushion that removes immediate financing risk and allows management to focus on advancing its programs. At a stock price of just $4.22, Protara's upside potential is staggering when you look at Wall Street's projections. Over the last 3 months, 5 analysts have issued 12-month price targets, with an average of $24.20. The high target comes in at $30 and the low at $21, all of which are well above the current price. This represents a projected upside of over 450% from recent levels, which is exactly the kind of asymmetric risk-reward scenario that penny stock investors crave. If TARA 002 delivers positive data, the stock could re-rate quickly, and with cash secured into 2027, the company has time to reach those value-driving milestones. For those who understand the inherent risks of biotech but are willing to take the long view, Protara offers the potential to be a true multi-bagger. The next company we'll talk about is Alpha Teknova, trading under ticker TKNO. Unlike Protara, which develops therapies, Teknova operates as a support company within the life sciences industry. It provides research use and clinical-grade custom reagents, buffers, and cell culture media, along with related products critical to bioprocessing, diagnostics, and molecular biology. What separates Teknova from generic suppliers is its focus on customization and scalability. The company has built a reputation for its ability to deliver exactly what customers need at all stages of development, from early research through clinical-grade GMP production. This flexibility allows it to serve a wide range of clients, from academic researchers to cutting-edge biotech startups and established pharmaceutical companies. On the financial front, Alpha Teknova has demonstrated both growth and discipline. In the second quarter of 2025, the company reported a 7% increase in revenue compared to the same quarter in 2024, showing that demand for its products continues to grow. It has also focused on operational efficiency, implementing automated manufacturing processes and lean production methods to reduce costs while maintaining quality. One of the most notable moves the company has made is reducing its workforce by about 40% from its peak, cutting annual operating expenses by roughly $18 million over the last 3 years. These cuts, while difficult, have positioned Teknova to be more resilient and efficient, ensuring it can sustain growth even in uncertain funding environments for biotech companies. Perhaps most impressive is Teknova's consistent track record of outperforming expectations. Since going public in June 2021, the company has exceeded consensus revenue estimates in 15 out of 16 quarters, showing management's ability to deliver results quarter after quarter. At its current stock price of around $6.15, Teknova represents a steady, under-the-radar opportunity in the biotech ecosystem. Analysts covering the stock are optimistic, with 6 analysts issuing 12-month price targets over the last 3 months. The average target stands at $7.50, with a high forecast of $10 and a low of $4.50. The average target implies an upside of nearly 18% from current levels. But more importantly, Teknova provides investors with exposure to multiple high-growth sectors of biotech without the binary risks associated with clinical trial outcomes. It's a play on the broader growth of the life sciences industry, offering a balance of stability and upside. When you put Protara Therapeutics and Alpha Teknova side by side, you see 2 very different but equally compelling penny stock opportunities. Protara is a classic biotech development story, with high risk tied to clinical outcomes but incredible upside if successful. Analysts see the stock jumping by more than 450%, and the company's strong cash position gives it time to prove its science. Alpha Teknova, on the other hand, is a critical supplier to the biotech industry, with a proven business model, cost discipline, and steady revenue growth. It offers investors a way to tap into the life sciences boom without being directly exposed to the binary risks of drug development. Both companies are rated strong buys by Wall Street analysts, and together they illustrate the type of asymmetric opportunities that exist in the penny stock universe when you focus on names with real businesses, strong fundamentals, and the backing of institutional investors. Well, that concludes our list of penny stocks that analysts predict could jump as much as 840%. These companies are not random names pulled from a list, but carefully analyzed businesses with strong growth potential. Protara Therapeutics offers high-risk, high-reward biotech potential with its novel pipeline and strong cash runway, while Alpha Teknova provides a more stable growth story tied to the broader life sciences industry. Both have earned strong by ratings from Wall Street, and both could deliver significant gains for investors who are willing to act early. Remember, penny stocks carry risks, but they also offer the chance for outsized returns if you choose wisely. If you enjoyed this analysis and want more insights into the hottest stocks on the market, make sure to subscribe and turn on notifications so you never miss an update.